Two things you can say about Trump. One, he's a doer. Not only does he say things, he follows through what he says. Now, you may not like it, and apparently some people hate it. He's not going to be like most other politicians where you go, man, he ended up doing nothing what he said or she said does. He's going to do those things. Now, two of those things changed my list of 10 things that troubled America before him. He's clearly changed the immigration story, and he's clearly changing the woke and DEI story. Those are two concerns that you had to have in the past administration that were negative for the U.S. in my view. They're out of the picture. But the three main things that remain, one he can't do anything about, and he may actually make it even worse, and that's our debt situation. Because from a federal standpoint, we have 27 states that are in financial crises that can't balance budgets, have a lot of debt issues, corporations that have borrowed beyond their means and have to go back in and refinance now, and consumers that are just beyond. 2/3 of Americans are working paycheck to paycheck, and that comes to my second issue, this retirement crisis that's ongoing and it's only going to get worse. There's not much he can do about it, especially since on the first one, it looks like he's going to spend even more, which he did in his first. Only two other presidents spent more percentage-wise on increasing the national debt in history, and those two either had two wars to deal with or major conflicts, which I don't expect Trump to be in. That's one thing. He's not seeking to be in wars. He's looking to get out of them. So I think net, as good as we feel good about some social and political stuff, if you're on a certain side, I think the financial side of it hasn't changed and could even get worse, and that'll overcome any of the great success. Now, if there's miracles and somehow they go the opposite way and they stop the deficits and they stop borrowing to the point where they actually balance a budget, I don't understand why both sides don't solve it in a very simple manner. If you really want to achieve this, pass the constitutional amendment. We have to have a balanced budget. We haven't had one since Clinton. And I'm also concerned, as you know when we talked earlier, that is the BRICS are an important part of the equation on the geopolitical front, and they're only going to become more important. And his actions in these early days are actually just making it a better marketing piece for those that believe in BRIC to turn to the other countries and say, listen, this is what the United States has done the last few years. First of all, they abandoned their allies when they left Afghanistan. They took sides in a war, froze the Russian money, and then took the assets of the income and gave it to the enemy. And now the new guy that's in charge is telling you, if you don't deal with me, I'm going to cut your knees off. You won't be able to walk. That's a calling card. Now, you're not going to see Brazil or Russia or even India, which, like you said in our interview, they're going to try to play both sides of the fence to see how this works out. But the bottom line is they're not going to get into a word battle with him, but their action's going to be in deeds. Listen, statistics came out. Less and less people in the world are trading with the U.S. It declines, okay? And the usage of the dollar is declining. It's down to almost 50% in the world. So I think the BRICS long term, I'm not one of these guys that say they're going to rival them tomorrow or they're going to have their own currency tomorrow, but it's an issue that I think Trump is actually going to propel versus initially some people think, how tough he is, he's going to stop them in their tracks. If we went back at any point in time and said to any of us that were investing back then and not playing in the kindergarten, we were told that gold is $2,800, and you would have talked to me at any of the majors, I would have said, oh my God, they must be worth X amount more than they are, and they're not. Part of that is because they had expenses go up, and they've made up for sins 10 or 15 years ago that a lot of restructuring took time and got better. It's my biggest argument, but it's a contrarian argument, that the actual mining industry, especially on the junior end, has less eyes and interest now than it did 20 or 30 years ago, for a variety of reasons, including crypto. I would say that crypto's done more to impact the junior resource market on a negative factor than any other single factor. Having said that, the majors are now almost a cash machine. Their free cash flow, which we're going to see in a couple weeks as they report their fourth quarters, should be on average at records and numbers that maybe 5 or 10 years ago we didn't think was possible. And because of the years of neglect overall on exploring for new metals around the world, which has shrunk because of a lot of reasons, you can't spin a globe anymore and go like this as you could have 20 or 30 years and go say, yeah, let's go look in there. But having said all that, I think it's one of the reasons why in recent days we saw even talks that Glencore and Rio were exploring a way of merging, because it's that much more challenging and there's that much more overall demand. So the majors are in a really, really good situation. Even if they almost doubled, they would not make up for the price of gold when they were last at such a valuation. So I would say from the majors, I don't want to say anything's a slam dunk, but they have the least challenge among them. Now, as you go down the food chain and you go down to where you and I live, or we speak a lot about in the junior market, it still remains a big challenge. One is because of the amount of companies that are interested are just not on people's minds and ideas. It's far more challenging for the juniors, not only from financing and all, but overall, to answer the original question, is they're very, very compelling, especially the majors. First of all, it was Lobo who I heard when uranium was under $20, and I had never really played it in my career as a manager, what have you, and got me interested. So I'm always interested to hear what he has to say, and I'll probably say that I more side with his view of the bullishness on copper. I think what's important to recognize is that copper has demonstrated that it has a really great floor round four, maybe 385, maybe even 375. That's a long way from those of us who remember when $1 or $2 was a very viable price. The second thing you have to look at is there's no known ample supply sitting somewhere now with it above $4. Now, if the world collapses and no one does anything, sure, then there'll be an ample supply. The other issue that probably favors more of why I'm more on Lobo's side is that the cost or the ability to get large-scale copper projects now, not only because of political stuff that may be problems and costs, is grade. Grade has dropped dramatically on copper. And therefore, there's going to need, at the end of the day, a higher price if it just stays the way it is, the typical slow growth that it's had, because miners are not going to go and spend $1 billion to go up some mine in South America, some mountain, when the grade is, so much less. It's a third less than what it used to be 20 or 30 years ago. So I think all of that is very, very favorable. And I think the best of all worlds, and where I focus a lot of my own investing, is in juniors that have both copper and gold exposure in their pocket. I would say that I'm more bullish, and I think we'll work our way higher. I think it's going to be a challenge to get above 450 in the first half of the year, but I think we will be in the second. And I think as we get to 2026, we'll be closer to 5 than we'll be to 4. If the uranium had another leg down and all those rocket ships turn into crash landings that we watch on the internet, I think I would be interested. That would probably only occur if the uranium price, I think, broke strongly below $70. I don't know whether that's going to happen. I really don't want it to see it happen because I have such good friends that I know that I follow that are long uranium, and I don't need to make an extra few bucks so they have to go through hell. Uranium is probably the best fundamental story that exists out there. And the metal that I think is coming around, that I think if there's going to be a spot play on it, so to speak, is zinc. I don't think it's going to get like lithium did, but it's going to come out of left field, and all of a sudden people are going to go, what's zinc? What is it used for? But there's a lot of fundamental change there and a very bullish supply-demand scenarios building up. So I think zinc would be one of the other metals that I would look at. I think the thing that we don't look at, which a lot of us missed out on, are the agricultural commodities. That's why I don't believe the 2 or 3% inflation that they keep telling us there. When you look at the charts of just about every agricultural commodity, they're double-digit over the last 5 years, 10 years, each year. So I don't look at them, but that would be an area that I think if you know somebody that's very sophisticated and been successful, maybe an area to look at. Canada is not coming to 51st state. First of all, Canada and Americans are the greatest allies. People forget that they're still the greatest trading partners. You don't notice too much different which side you're on the border. I think it's a negotiation ploy there. And I think that will change if and when there's a change on the leadership and the party that's leading Canada. I think the Panama Canal is just a joke. That's just, again, that's a notion play. I think if anyone was going to work, it'd be Greenland. But here's what I think is going to happen in Greenland. I think that Greenland will be smart enough and try to do more strategic deals with the United States and try to get more money out of Denmark at the same time. I think that's what they're saying behind their closed doors. In terms of that Colombian thing, he didn't really change his tune, the guy. He said, well, listen, I'm going to send our own presidential plane. But Colombia, it's so much smaller compared to saying getting into a tariff war with Canada, China. Let me tell you this. You cannot show me anywhere where trade wars, where tariffs were enacted, became very beneficial over a long period of time. And I think he knows that too. I don't suspect tariffs are basically adding a tax to the country that's imposing. And I don't think the United States can afford any more additional taxes. So I think it's a blustering, it's a positioning, and it has a lot to do what he does in his first 100 days. It's early on and people feel good to change, but if you start to see that kind of slow and not all these things are happening, or God forbid you get a black swan in the stock market and the market's not going up, it's going down. There are a lot of things that still need to be done in order for his traction to really gain strength and make wholesale changes, which I'm not expecting to happen. As a contrarian, it's a screaming situation. Now, I'm not telling anybody to do this. I'm not doing this. But on my old money management days, I'd be talking to sophisticated clients about being long emerging markets, short the U.S. market simultaneously. I think that gap will shrink over time. I am concerned about a part of the world, not so much where you live, but you're closer to it than me, and that's Western Europe. I think the EU is done as we knew it. I think Germany has flooded and sputtered and is no longer the driving engine that could. And with that, one or more of the countries in the EU are going to look to either restructure the way the deal is done or, in a sense, try to separate themselves from the EU. So it's not an area in Western Europe that I would feel. More the emerging countries, especially in Asia. A country like Singapore is a very strong country that I would not, if life was different, I would even consider living in, or what have you. So I do think we've come to the extreme of that. I don't think it's going to happen overnight, but I do think when you looked at surveys where I saw that managers had only 1-2% exposure to European market and they had 70-something% exposure to the US market, that's concerning.